So the major shift that you are seeing here is less and less crypto native, especially those altcoins that's not providing or producing real value. More and more mainstream assets. They are listed on NASDAQ and NYSE, big ETFs and indices. They have much more fundamental value.
Generally, how do you see, serving the golds, the Bitcoins, the fixed income assets, the, tokenized RWAs?
Is this a priority for Bitget? Do you see Hyperliquid as a big competitor, or do you see it as good for the ecosystem?
Welcome back to The Roll Up. I'm Robbie.
I'm Andy. Robbie and I met at the University of Florida in 2017, where we first found out about digital assets.
We learned a lot along the way, and we're bringing you face to face with the leaders of our industry.
Sit back, relax, and enjoy today's episode. Gracie, how are you? Welcome to the show.
Thank you for having me. Yes, it's great. I also just landed in the US from yesterday, so now a little jet lagging, but having a great time.
Well, welcome. I'm in Hawaii. I jumped out of a plane yesterday, and now and I survived. And it looks like the markets followed me today. Kind of saw that one coming. Gracie, we're going to get into it. It's going to be spicy. Feel free to, say no comment if you don't want to comment. But everyone is blaming CZ and Binance right now. Binance just unloaded a massive clip on the market of spot Bitcoin. You can literally see it in the flows. Every time Bitcoin dumps, Binance is unloading clips of Bitcoin. People are really pissed about CZ, that they think that Binance is corrupting a lot of the market and that this market can't continue in a healthy way with them as the number one exchange. What's your take on the current market structure here with Binance leading the way in terms of their selling of Bitcoin? Where are you kind of looking at the broader crypto market structure as it lands today, post 1010? I think a lot of people are upset. Gracie, we brought you on to get your market takes. Thanks so much.
Sure. Well, 1010, I would say, yes, it started with a Binance technical slip, like a glitch. And then it followed with, USD pegging on Binance, a few of other wrapped coins in BTC and Ethereum, also due to the kind of death spiral effect went down a lot. And then largest liquidation, daily liquidation happened on October 11th or 10th, depends on your time zone. I was also traveling at that time, and when I saw that happened, it's just massive. Lots of I think that time Asia wasn't awake, but that time I was in Dubai translating, and I get to experience the whole thing more vividly. What I would say is after October 10th liquidation, the market, especially the altcoin market, is very, very weak in terms of liquidity, in terms of trading volume, or just interest. Well, people were talking about altcoin season, but even in early 2025, I've already said I don't think there will be an altcoin season at all. But liquidity the largest liquidity crash on October 10th just made it more true and more magnified. So right now the market is still, in my opinion, kind of correcting and finding its balance. Later this year, I do think Bitcoin has still very strong fundamental because of the larger liquidity coming out of the market in 2025. They flow into gold and even US stocks like Nvidia. These assets all hit their all-time high. But Bitcoin just fell from world's top 5 asset class to right now top 8 or 9. I think Bitcoin is actually the best asset to reflect liquidity because of the fact that it doesn't really have a pricing model. So the price can be largely adjusted or affected by should be a good reflection of liquidity. In 2025, we didn't see it happen because that year gold went up 60%, but Bitcoin went down 6%. Right now, today, like you pointed out, gold, silver went down, US stocks corrected, Bitcoin and all the altcoins also went down. But I actually think it's a little bit panic due to the geopolitical reason, or maybe some exchanges are selling. We are not. Actually, for the past 11 to 12 months, we have been actually accumulating Bitcoin rather than selling. But my point is, in general, my market take is this year shouldn't be too bad. Should be, Bitcoin still has a chance to hit 150K or so.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
YEET is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Love it. Yeah, I think we had Hasib on for our 2026 crypto predictions. He thought the same with regards to ending this year. One of the recent things that is happening as a result of this liquidity shift that you talk about with regards to metals, US stocks and others, is people wanting to trade these assets in crypto rails. So whether it's on chain or on centralized exchanges, people are now wanting to trade stocks. They want to trade gold. They want to trade silver, copper. They want to trade all these assets on chain. And the place dominating that is Hyperliquid. Hyperliquid's HIP3 has allowed them to basically create a way that they can trade pretty much any asset on chain on Hyperliquid. The daily volume has hit 2 billion as of today. The OI is almost at 1 billion, and they're growing 100% week over week over the last couple of weeks. This is like the biggest growth story right now in crypto. We think uncorrelated in terms of the rest of the market. How do you think about the rise of stocks, gold, metals trading on chain as well as on centralized exchanges? Is this a priority for Bitget? Do you see Hyperliquid as a big competitor, or do you see it as good for the ecosystem? How do you kind of think about this entire new market of crypto traders and retail wanting to speculate on other asset classes, but do it on chain or in the crypto native friendly platforms that they're used to?
You may not realize we actually offer on-chain asset trading as well
Yeah.
as tokenized US stocks, tokenized ETFs, etc. Actually, Bitget from September 2025, we call ourselves UEX, Universal Exchange, rather than CEX or DEX, because people used to think, CEX, DEX, they are very different. CEX are very centralized, DEX are not, and then KYC, like AML standard, everything is different for CX and DX. For us, we are still holding a pretty high, at least from a KYC AML point of view, in terms of having all our users needs to do KYC. That's more like CX. But in terms of the asset offerings, we are you can call us DX. That's why we think, none of these two words can define us well enough. And we said UEX. UEX is a little bit similar to what Brian Armstrong called it everything exchange. Now we often offer tokenized assets on chain. Any of the assets that's issued on 5 top publishings, including Solana, Ethereum, BSC, Monad, Morph, are all tokenized, are all tradable on Bitget. You can just put your contract address and then trade. And then tokenized US stocks is another big market that we're developing. So back to your question, I feel Hyperliquid is, I wouldn't call them a competitor because essentially the market that they are serving is a bit similar to what we were before being more compliant. There are users that we gave up when we said we need all of our users to do KYC. So they moved more, some of them moved to perp DEX or DEX in general. And we, as one of the largest centralized exchanges or universal exchanges, we do need to be more compliant. Otherwise, we can't go bigger. So that's a little bit of a give and take kind of game in terms of who we are serving, what we are offering. But in general, I see lots of potential in TradFi, in tokenized gold, silver, stocks, etc. And we see lots of tractions over there since the last few months when we launched tokenized US stocks and silver, gold, etc. So through some CFD platform.
Yeah. So is that how you see the perps market and the trading market like playing out? Like you get this kind of bifurcation of the more, let's say, not compliant, borderline gray area exchanges or on-chain venues that don't require KYC, AML, et cetera. And then you'll have like the much more compliant, institutionally oriented exchanges that have all of the checks and balances in place. And you'll kind of see this split happening. And if you're kind of in the middle, you're kind of left in the middle without an edge. Is that how you think about the trading landscape evolving in crypto generally?
I think so. I think that's a good summary of how we look at the market. Actually, last year we we spent a lot of time strategizing and thinking about which way we should go. Whether we want to go for more compliant, more mainstream market, or continue in running an offshore exchange and in the gray area. So we chose the first way. And it doesn't mean that the second path wouldn't be successful or wouldn't have a market. Actually, there's a big market because we've been there in the sense that that we know the market is very big. And going the first path is probably the tougher but more correct choice for us.
Looking for yield that stands out? infiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. infiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Trade on anything. Economics, weather, sports, crypto, and more. All on Kalshi.com 24/7 for the world's biggest prediction market.
How do you see the space trajectory with respect to the assets that are coming on chain? It's no longer just Bitcoin and Ethereum. On this show, we've said that there's sort of a lack of quality assets. But you mentioned like now we have, tokenized commodities, we have tokenized metals, and there's a growing asset class in income products, which is effectively like these tokenized money markets, tokenized private credit, all these tokenized RWA products. Typically what we've seen in terms of these income style products is, it starts with a stable coin that you own in your wallet, at least if it's on chain. You go take that stable coin and deposit it into some sort of yield producing vault or smart contract. Now those things are getting packaged up and distributed just like regular assets that pay some sort of yield or dividend. Do you see Bitget as sort of a distribution pathway for a lot of these assets right along with the speculative assets? Or generally, how do you see, serving the golds, the Bitcoins, the fixed income assets, the tokenized RWAs, serving all of these products when all of them are so different without overwhelming the end users, right? Still providing a simple user experience.
How do we make sure that we don't overwhelm users? I think that's a good question. I sometimes find it confusing, and I talk to my, for example, CPO, chief product officer. It's a she as well. So two girls having lots of conversation about what market is giving us feedback and how can we improve from the product wise. So a few thoughts around that is, first of all, I probably don't have like a full answer, and I think we are overwhelming our users a little bit by providing universal asset coverages.
It's the balance, right? It's like users always want more, like they want more choices, but they also want it to be simple. You just can't have both simplicity and lots of user choice.
Yeah, that's right. But the big picture we are seeing here is not about how many tokens we have or how many assets we provide in terms of trading. It's about what users want. So even for tokenized US stocks or ETFs, we are not listing all of them. We only have about 200 tokenized US stocks. And then for the futures trading, the perpetuals of those US stocks, there are only 30 plus. On the other hand, crypto and altcoins, I would say in 2025, we did slow down a lot on token listing for the pure crypto native kind of token. And we delisted a lot that were on us. The reason being these asset classes or these altcoins we are not seeing as much liquidity trading volume. Sometimes price can just crash like 30% a day. And those assets are not traded by the users anymore. So we delisted them. So while adding all sort of asset classes on Bitget, we are also delisting some altcoins. So the major shift that you are seeing here is less and less crypto native, especially those altcoins that's not providing or producing real value. More and more mainstream asset. They are listed on NASDAQ and NYSE, big ETFs and indices. They have much more fundamental value. So as an exchange, we want to look at, number one, what our users want. Number two, what are the assets that has value, that has volume, that has people who want to trade? And then how do we enable them? So that's the methodology behind. We definitely don't want to overwhelm our users, but as far as we keep this mental, mentality here that we know what we're doing and why we're doing them, I think that should be fine.
Yeah. Gracie, the users want to trade uranium and they want it now. They want to trade commodities right now. They
Don't
want to
let
trade.
Andy sell you uranium. Andy's got a big uranium position he's been pushing on this show.
That's
Well,
funny.
it's
You
one
know
of the
what's funny is
tokenized
that
metals.
the
Go ahead.
Tezos guy came on, Rob, so long ago and told us about it. Remember that? And
Yeah, he did.
and it was
They had
way
a
lower
tokenized.
than.
They had a tokenized uranium product that they
Yeah.
listed as well, right?
Yeah, Gracie, I'm curious, when you're thinking about the current market structure, I just want to come back to 1010 because I saw this tweet today that was like, oh, 1010 really screwed us, and it was the chart of Bitcoin negative 15% since like June or something of last year, and then it was S&P, Nasdaq, gold, and there was like 22%, 22%, 40%. Like, do you think we're still picking up the scraps of 1010 in the market? Like, do you think that we're still like navigating market maker fallout? We're still waiting on some like pieces to get put back together? Or is this just like we all, said this time was different, that the 4-year cycle was over, but it's a midterm year. It's the year after, it's the the 4th year of the cycle has passed. Bitcoin had an 8x from 15K to 125K. We're just going through the usual pullback here, and 1010 maybe could get blamed for it, but hasn't left necessarily like catastrophic damage in terms of the structure. Like, I'm trying to get a bit of insight from your side into the structure of what you're seeing. How healthy is the structure right now in Bitcoin? Do we have cause for concern with regards to the way that market makers, exchanges, et cetera, are holding up? I mean, we had a crazy 2025, right? With Bybit. I remember you coming out and helping Bybit with their hack, and then 1010, and then all these things. And so, like, are we at a healthy point behind the scenes right now? I'm not sure exactly what you can share, but I'm just curious, like, what you're seeing.
That's a good question, and I don't have a crystal ball. I wish I could. But telling whether this is already very healthy position or not, that's like holding a crystal ball. But I do think fundamentally, Bitcoin, as we pointed out, Bitcoin should still have a rally because of the liquidity is increasing. The global market, monetary supply is increasing, and Bitcoin should reflect that. Um, whether the well, I also noticed that maybe yesterday Kathy Wood thought that the so-called correction period should be very much finishing now. I'm slightly less optimistic, but I'm not pessimistic. What I mean by that is I think I don't want to really guess the market. But if you're a long-term holder, what you should do now is probably accumulate a little bit of Bitcoin, especially if you don't have any position. But whether Bitcoin can reach another 70K, even 69K, I think it is possible. I as a long-term holder, I'm more like I prefer to start buy when I see the trend being very obvious. I don't mind buying slightly higher, but I don't want to be very very much like, again, predicting or just speculating on what's happening in the market.
Yeah.
Well,
If that makes sense.
It does. It does. And I think, because you don't have a crystal ball, none of us do. We're just, we're trying to draw, what a unique perspective that you have as a centralized or, a universal exchange, as you called it. You've got quite a bit of insight into the flows, right, of several high volume market makers and traders. And so I guess I'll just double down, not trying to ask you to predict, but a very similar question is, are you seeing anything in the flows as far as, is it more retail? Is it more institutional? Is it, a greater volume? Is there anything that you can point to in how you're seeing the trading via Bitget, right? All the throughput that is coming in, the volume that's coming in. Is it on particular assets, more on maybe the major asset classes, or less on altcoins? Is there anything that you can point to in the trading flows through Bitget that are signaling anything to you about the market?
In terms of what we see or in the business, I would say institution and retail are like half in terms of volume, but the asset classes that they prefer is very obviously mainstream cryptocurrencies, and also the mainstream US stocks are picking up in terms of volume on Bitget as well. TradFi, gold, silver, copper, etc. Even Forex. We also started to offer Forex very recently in January this year. So the conclusion from that observation, or my personal take, would be Bitcoin is still dominating the narrative, and especially if you are running or planning to do a token launch on altcoins, you want to make sure that your project can hold in the long time and is doing your business, have some sort of inflow, rather than purely issue a token then rug and
Yeah.
leave.
We
That would
call
be
this the
very
revenue meta, Gracie.
yeah, that would be very bad to the
Yeah.
market, and that won't succeed either. Right now, exchanges are very very selective in terms of what token we are launching.
Yeah, just last thing there, Gracie. What has been the major changes for listings and for tokens, right? Because we've got this general thesis that, and I think that the entire market knows that it's changed. It's gotten more harder due to more tokens, more dynamic, different types of businesses. Give us the quick and dirty here on the changes in what you're seeing industry-wide on token listings and on the way that exchanges are operating with new founders, kind of trying to prevent these slow rugs or easy money operations that have been plaguing the industry for a while. What are you guys changing, and what are you seeing as the core industry-wide shifts here?
The core industry-wide shifts would be, again, pure crypto native stories won't really work. Some of the good projects that we see now are either infrastructure like RWA, stablecoin, PayFi, and then probably have some sort of elements in AI. So this is not just how exchanges are listing. I've talked to a lot of VCs, VC partners as well, and I think from the VC point of view, what they are investing is also shifting a lot. We actually collaborate. We already funded a VC 400 mil AUM VC called Foresight Ventures, and we do have like weekly meetings. It's the same thing. So the narrative has been very different. And then from an exchange listing process point of view, not sure how much you know about how we evaluate project, but I can give you some sort of quick summary.
Please.
Would be we do look at their product. Like if you have an app, you have an agent, we want to look at what it is doing exactly. We also want to look at the community and social. so that we know how popular this project is. And we even divide the volumes from geographic point of view in order to understand how healthy those volumes is. And then token economy, that's just another big monster there that we have some core team who will look into them. And we want to ask for auditing report for some token auditing as well as code auditing. We look at the background of the project as well as the background of the investors. So it's a quite tedious process that our listing team is like the BD talking to the project, but behind them there's a very strong research team who look at each element differently and support our listing managers to talk to the project and come up with good plans. Yet, I would say in 2025, most of the tokens, especially after October 10th, are kind of like the graph probably look like this. Like the listing day is the highest price for them, which is again very unhealthy for a whole sector, for the whole blockchain or crypto sector. People said Web3 is dead. This term just doesn't make sense. It's not revolutionizing Web2, at least from the application point of view. I probably agree with that, and that's why we have not been listing as many altcoin tokens. And I even tweeted, I said altcoins are dead.
Yeah, I saw that.
A little bit extreme, but I want to make my point in that sense.
Yeah. Gracy Chen, thank you so much for your time. Enjoy your time in the US. Enjoy your time fighting the good fight here. Thank you for your energy and your work in the industry. And we'll have you on soon again. Thank you so much.
Thank you.
See you next time, Gracie. Thanks.